In part one, we spent a lot of time talking about your financial goals, where it is you want to be. We talked about your spending, we talked about savings, and we talked about, most importantly, some ways you can cut back on your expenses. Now, when you cut back on your expenses, you decide, what do you do with the money now that you're starting to save? Well, you could go and spend it, although that's not really going to go towards meeting your goals. So you need to figure out where you're going to put it. Well, I guess you could hide it in your mattress, but that might not be the safest place and probably won't turn it into more money. So you have to put it somewhere. And there's a lot of choices, and there's no one that's the right answer. So let's talk about a few of them. One of the most common ones, one of the best ones, is probably just your regular old savings account with a little twist. I recommend that everyone have a savings account, and you have it more than one of them. In fact, I've seen some people, I've suggested they have 3, 4, 5 different savings accounts. Why? Perfect example. You have your car paid off. So one more month left for your car loan and it's going to be paid off. Is there any reason why next month you can't continue to make that car payment? The only difference is make it to yourself instead of making it to the bank. So let's say you had a 4-year car loan and you can have that car for 8 years. Well, now in 4 more years, you might have enough money to buy that next car cash. And if you don't have enough to buy it cash, at least you have a nice chunk to put down. Maybe your next car loan can be 12 months. And then maybe your goal could be your next car being paid off in cash. But the key is having that savings account earmarked just for your car. You've been making a car payment for the last 2 years, 3 years, 4 years. Why can't you keep making that car payment? Like I said, making it to yourself. And also thinking about what your other financial goals are. And create savings accounts for those as well. Emergency savings account. Start putting $100 a month away, $200 a month away, $25 a check away. You know, you found some ways, hopefully you come up with some great ideas for how you can start saving some money. But now the key is to start, you know what, let's really start implementing some of these ideas. And an online savings account. And what do I say online? A lot of people say, well, I've got my checking account in the corner. I want to put it in that place. I say online because it's a little further away. In part one, we talked about how important it is to have that money further away. The less accessible your money is, the better it is for your saving it. So online savings account, 2 of them, 3 of them, 4 of them. And I'd suggest a website, bankrate.com, does a good job of telling all the different financials that are available out there, what their interest rates are, and you know, because that's another benefit of having a savings account. They're going to pay a little bit of money for letting them hold your money. Pretty much all the ones I've seen are government insured, completely safe, you know, unless you get a really large amount saved, but then you can start moving into some different banks. So, savings account, go online tonight. Most of them now have a 0 minimum. You know, you could put $1 in there and open yourself up an account. So you can find a way, $25, $50, $100, and some of you are going to be able to do big amounts, some of you are going to have to do small amounts. But the key is to get it started and get it going right now. So take a look at some online savings accounts. One of the other ways that we start investing our money, and that's having a checking account. And it's amazing how some people, more people than I would believe, don't have a checking account even today. And not having a checking account is a very expensive way to manage your money. Let's take a look just how expensive it is. Take a look at page 32 and 33 of the workbook. Here we talk about how much money it costs not to have a checking account. So it's going to cost you money to go out and get money orders or figure out how to pay your bills. It's also a safety issue. Who wants to go to a check casher and walk out with your whole paycheck in cash? Probably not the safest way. And then what happens if a payment gets lost? Well, now you've got a whole new set of problems on your hands. So having a checking account that you can also use to track your spending. One of the things we encourage when you're working on that family spending plan is how you're tracking your spending, see exactly where your money's going. So it is very important. Another reason to have a checking account is many employers today, they don't issue checks anymore. They're going to require you to have a checking account or a bank account where they can put that money in. And it's kind of embarrassing to have to tell them you can't. And hopefully they have a way around it, like issuing you a debit card. But once again, those are often going to have a lot of fees. And with anything, when you're talking about finance, there's always places out there that are charging fees, trying to make money. And it's your job, though, to have the banks compete for you. That's one of the great things about the fact we have a lot of financial institutions in this country. That means that there's competition. And you can take advantage of that, and you can still find deals for no fees or low fees. But when you're picking out what financial do you want to work with, you want to see what are the features of it that you need. When selecting a checking account, what's their ATM network? Is it a big one? Is it a small one? How often do you use it? Is it close to your house? Those are some of the features that you want to check out and see are important to you. But like I said, this is very important for showing how much it costs. So if you're not sure a checking account is important to you, take a look at page 32 and 33 of the book. Look how expensive it costs not to have one, and really give some thought to reconsidering not having an account. Now, if you do have an account, let's go a couple pages later and talk about managing it properly. Because I've seen people who haven't managed their checking accounts properly end up getting it closed on them. Now, not managing properly is bad for a lot of reasons. One, it can affect your credit. And part 3, we're going to talk about how important your credit is. 2, it can be a lot of fees, and those fees add up. If you start having over limit charges, NSF charges, you start getting all these expenses, ATM charges, it really adds up to a lot of money. So managing your account, not overdrawing that account. And if you think you might overdraw the account, set up a savings account at the bank, put $200, $300 in it, and have them tie it together. So at least then, if you ever do go over your bank account balance, they can transfer the money from your savings to your checking to pay for it. Keep in mind, most of the financials I've seen will charge you for that. So if you think you're going to be overdrawn, go to your bank account, go to your checking account, log in, your checking or savings, and set up alerts. This is important for security and also for proper management of it. So I have alerts for my checking account that if my debit card is used over a certain amount, I get a text. If my balance gets below a certain amount, I get a text. So you're aware, I need to log on and transfer this money from my savings to my checking. If it's at the same bank, it's going to be instantaneous, and then you won't charge yourself any money. You won't have overdraft fees. It's a much smarter way to manage your checking account. So absolutely, once you get this account open, if you have an account now, you want to go online, set up those alerts to protect yourself from financial mismanagement, fees, and also fraud. Because we do live in a society where people have figured out how to get in others' checking accounts. The laws are on your side, but you need to put protections in place to make sure that happens. So it's so important to make sure you're properly managing that account. And what are some other things we recommend? Keep track of your transactions. You know how many times I see people who don't balance their checking account anymore. The banks make mistakes. You can use your debit card and they charge the wrong amount. So it's really important to make sure you're keeping track of those. As I said, always be aware of your balance so you don't overdraw that account. Set up those alerts online. Go right now and really get that done tonight. Open up a savings account. A lot of reason to do that. As I said, perhaps even consider opening up more than one. Watch those ATM fees. Do everything you can to not have to go to a foreign ATM. Foreign ATM, we mean one that's not owned or controlled by your financial institution. That's expensive ways to get access to your own money, and ones that can be so easily avoided with a little planning. And if by chance you have to, you're on vacation, try not to do it too frequently. Figure out how much am I going to need for the next week, not how much do I need for lunch, and end up going back there tonight, take out some more money and another $6 worth of fees. Avoid overdrafts, and I said avoid the overdraft protection. If you're going to do it, have a savings account there, move it over yourself, because I've seen cases where someone overdraws, they're using their debit card every single time. The bank's taking money from your savings account, moving to your checking, and charging you several dollars to do that. You can end up with 8 transactions in a day. That adds up to a lot of money really quick. So that's really an important key. And avoiding general fees. There's no reason this day and age that we've got to pay fees to have bank accounts. They're too competitive, and if you take a little bit of shopping on your part, you can get one. But like I said, if you're not paying attention to this, you don't manage your account properly, what's going to happen is you're going to close your account, you get reported as it was closed by the financial, and others won't open one for you. and you don't want to get locked out of being able to have an account. It's just too important, too much of a key to financial success.